Hello and welcome to the fourth section of Guild. And this is where we talk about constructing deals. Now, this is kind of the hardest video to put together because you're going to come across, hopefully, if you're successful in what you're doing, you're going to come across lots of different deals and they will be constructed in lots of different ways. And so it's difficult for me to kind of give you a clear direction on what the construction of a deal is going to look like. But what I'm really talking about is earlier on, we've talked about ways that you can monetize your network. And so the simple ways you monetize your network are people paying entrance fees to be belonging to it, people paying membership fees, sponsors paying to get access to it. But the nice thing about the investment network is you've got an opportunity to put people together in deals and you've got an opportunity to cut yourself into those deals. And that's where you earn equity in deals. And that's where you potentially have an almost unlimited upside. So I'll keep this video fairly brief. And then what I think I'll do is as our members come to us with different scenarios, I'll try and help talk through those and give some actual case studies. So here's kind of my high level thinking on this. The first thing is that you always want to be looking to put deals together. You always want to be looking to connect people and looking for those opportunities in a way that other people don't. And what's interesting is once you start to think in terms of, hey, if I could put that person together with that person, they might be able to do something magical. And then I would get some value from making that happen. Once you start to think like that, you start to see those opportunities everywhere. And the more you do it, the more you connect people, the more people want to be in your network. And what happens is people will come to you with more and more opportunities. Most of those opportunities won't be right for you, but if you can just keep pushing them back into your network, what happens is it sort of becomes this snowball effect. The more you help people, the more they want to be a part of it. So that's the way forward. Now, look, assuming you've never done this before, what I would suggest is that at the beginning, probably for the first 6 months, 3 months, 6 months, 12 months, is just focus on helping people. Don't worry about making sure you get rewarded. One of the things you need to remember, and I've touched on this before, is that most deals don't happen. Humans being humans, we get distracted. We've got other priorities. Even if everything is lined up perfectly, deals can take forever. They go off the boil, they come back on the boil. What you don't want to do is be somebody that's constantly trying to focus on what you get out of the deal. Instead, focus on how other people can get value from the deal. And so I actually learned this when I was a young rookie. And I remember I was actually working for a company and I had a meeting with a supplier earlier in the week. And then I had a meeting with another supplier later in the week. And I went to my boss afterwards and I said, I don't think we can do anything with either of these suppliers, but I think together they would do amazing things. But how do we make money out of that? And my boss said, just connect them, you'll be rewarded in heaven. And his view at the time, which has been my view for many, many years, is if you don't add any value, just put people together and you'll be rewarded in heaven. Now, I think in terms of what we're trying to achieve, ultimately, we want to get to a point where the value we're providing is that we're putting these people together, is that we're seeing these opportunities. But when you're starting out, it's much better to build a track record of connecting people and delivering real value than trying to focus on just what you get out of a deal, because oftentimes what that will do is that will stop a deal happening because it just becomes all about you instead of all about making the deal happen. So when you're doing this, you're starting to create social capital, and social capital is when your network starts talking about you, starts bringing you more deals. And that's ultimately what we want to be doing. Now, look, the idea ultimately that we're getting to is this opportunity for us to bring people together and create value just through connecting people and get a slice of the action for doing it. And so at a very simple level, it's just an introducer's agreement. They can be very, very basic, very, very standard. And you'll actually find that a lot of companies, when they're raising money, are very open and upfront about this. So I've got one on my desk at the moment. They're looking for, I think they're looking for $750,000 and they're paying 8% finder's fee. So if I can connect them with somebody that wants to invest, then I would make 8% on that. One of the whole sort of, I guess, philosophies of Guild is it doesn't make sense for me to try and keep that whole 8% to myself. It makes much more sense for me to go out to my network and say, hey, I'll split that 8% with anyone who can help find me an investor, because it's still better. It's better for me to get 1% of a deal than 0% of a deal. So you want to be somebody that enables deals. You want to be somebody that people are constantly coming to saying, hey, look, I met someone the other day. They're doing some cool stuff. Shall I put them in touch with you? You want to be that person. What you don't want to be is the person that gets in the way, that slows deals down, that causes roadblocks. And unfortunately, you're going to come across a lot of people like this. Many of them lawyers, to be honest. So a lot of people will always try and figure out what's in it for them. And if they can't find an angle for them, they will just put roadblocks in the way. We don't want to do that. We want to do the opposite of that. Like I said before, it's better to connect people and have that goodwill than it is to potentially derail a deal just because you're trying to get a basis point here or there. On sort of along those lines, it is when we are going, say a company comes to you and they say, hey, look, we're looking to raise $100 million. And you say, well, I'm connected to this global network. I'm sure I can help you with that. Are you okay for us to put together a deal where I get an introducer's fee? In almost every situation, they'll be more than happy to do that. What you want to do is you want to make that deal attractive to them. That agreement needs to be attractive to them. So you don't want to be asking for retainers. You don't want to be asking for exclusivity. Now, a lot of people are going to push back on that. A lot of people like getting retainers, and basically say, well, look, if I'm going to do the work, if I'm going to ship your deal around, then I want to be paid a few $1,000s a month for my expenses. In all my years of doing deals, it's never worked out for me. I've paid lots and lots of people retainers. As soon as they start getting paid, they very rarely do the work. Results-based compensation is definitely the way to do it, and that's what companies prefer as well. So if you put yourself out there and say this is just success fee only, it makes you much more attractive. The other thing is don't try and get exclusivity. These are all things that later on you might try and negotiate those things if you're absolutely certain you can do the deal. When you're just starting out, it's just you actually get more credibility by leveraging off this company and starting to build your reputation as a deal maker, as a rainmaker. So make it as easy as possible for those companies to work with you. So yeah, just as a point, really focus on making life easy for as many people as possible. Once you've got a deal in hand, when you're talking to potential investors, your job is not to oversell this. Your job isn't to promise that it's something that it's not, because ultimately you don't control what happens for the investor. And I've given this example in the past. There's plenty of deals that I've seen in the past, companies like Twitter, companies like Airbnb, that I would never have given a second thought to or thought that they were serious businesses. So your job isn't to judge those deals. Your job is to put them in front of other people. Don't overpromise. So don't say this is going to be the next SpaceX or this is going to be the next best company ever. You don't know that. It's much better to be understated and just say, hey, look, this is an interesting company. I'm dealing with them. It sounds like it's a good premise. If you're invested, then tell people you're invested. That's a huge credibility boost. And you don't need to tell people how much you've invested. It could be $1,000, it could be $10,000. But the fact that you've got money in the deal will always make it easier for you to find more investors than if you haven't. If you're not invested, make that clear as well. You don't need to say, you say like right now I don't have liquidity, but if I did have liquidity, this is definitely a deal I would do. Or look, honestly, this isn't a deal that I would do, but I know you like this type of deal, so I thought I'd pass it to you. Um, Make sure ultimately what you're trying to do is not every deal works. In fact, the vast majority of deals don't work. You don't want to burn a relationship because of a deal. You want to maintain the relationship. So uh, the purpose of any conversation is to keep the relationship. So even if the deal does start to go sideways, so if you bring an investor in and then a year or 3 years down the line, the deal's going sideways, um, keep the relationship open with the investor. Like uh, you might have to have some tough conversations, but it's worth it because you're not, if you haven't gone out and overpromised, then that's definitely a positive in your case. So again, using the IPIN example, we have a number of partners that go out and put the IPIN in front of people. So the IPIN is a 5-year bond that Unity Group offers. So if you wanted to be an introducer for that, and any guild member can be an introducer for this product, you would say, you're talking to your investment network and you'd say, hey, look, are people interested? Is anyone interested in fixed income products? And if somebody is, and you say, oh, well, I've got this one, I'm not personally invested in it, but a contact that I know, it's a Singapore regulated fund. And if you're interested, I can connect you with them. So you're not promising anything, you're not overselling it, you're not saying it's the best thing ever. But it's yeah, it's a very, very simple positioning. Now, the way that Unity Group works with the IPIN is that we pay the end client gets 15% a year, and they can get that paid monthly, quarterly, or annually. Um, but whatever amount they put in, and it's for sophisticated investors only because it's a regulated fund, so it's 100K and above, you will get 3% on top of the 15 that they get. So if they put 100K in, you'll get 3,000 a year. If they put a million in, you'll get 30,000 a year for the duration of the contract, which is 5 years. So it's a very nice little earner if you've got people in your network that would be interested in that. Again, your job is not to sell it. Your job is just to connect the potential buyer with the potential seller. Now, this is probably the most controversial element of this agreement and or of this whole construct section, and I'm sure I will get pushback, especially from lawyers. But I kind of have a philosophy which I talked about in the book Progressive Partnerships, which is this kind of handshakes versus contracts. What I've discovered over the last 25 years is a lot of people try and get everything nailed down at the beginning. So um, you come to us and say, okay, yeah, I'd like to represent you. I'd like to go and take your deal out to my network. Um, and then we spend weeks and weeks messing around with contracts and with lawyers, and you're paying for lawyers and we're paying for lawyers. And you cover absolutely every eventuality. And what happens if I raise over this much? And what happens if I don't raise this much? And what happens if the person puts money in and then takes money out? And you kind of end up going through this whole thing. Um, and it takes a lot of time. And as we go back to, many deals just don't happen. Um, Whereas the approach that I take, especially when you're starting out, is handshakes are much more effective. And the reason that I say that is I've got deals on the table today that are worth tens of millions of dollars to me that are just done on handshakes. But they're people I've been working with for years. I trust them. And um, we're both parties are fine with that handshake. And I think that the way I've always thought about it is, okay, well, look, worst case, what happens? Somebody screws me over. Somebody says, hey, look, I know we shook hands on that deal, but there's nothing on paper, so I'm not going to pay you. Well, even if we had signed a contract, am I going to have the resources, the time, and the energy to go and pursue that person through court to try and get that claim back. And 99 times out of 100, and many, many times when I've had legal contracts in place and people have done the wrong thing, I've still made the decision not to pursue them through the courts because it's just not worth it. It hasn't been worth it to me to chase them through the courts and take on that extra expense, take on all that legal hassle, and it's energy draining, and it's kind of going backwards rather than going forwards. So my personal belief is that, especially when you're starting out, just focus on handshakes. What I'll normally do is I'll try and send an email after the handshake just to confirm what we've talked about. But that's kind of my approach. What you can also do is kind of take that as a now strategy, which is, hey, let's just do this on a handshake. I'll drop you an email to confirm the points. If we start making money, then sure, let's put together a contract together. If we don't, we haven't wasted any time. So a now strategy and a later strategy, and that works quite well as well. But yeah, I think a lot of people tend to get really caught up on this, and they end up investing too much time up front on these contracts, rather than just focusing on actually what generates the money. And ultimately, if you're the person that generates the money, there are some bad apples out there, but there's a lot of good people, and you'll end up just working with good people. Now, look, like I said, I'm sure I'll get pushback from people on that. There are anally retentive people, detail orientated people that like to have every dot crossed and I dashed. It will tell you that like you shouldn't do anything unless you've got 30-page contracts. They're not necessarily wrong. Ultimately, you got to do what works for you, and whatever you've got to be comfortable with. But my approach is definitely I'm quite happy with handshakes 99% of the time. All right. That is pretty much it for construction. What we'll do as well is, as I interview people that have put deals together, or as we have members that have questions around deals, we'll add in some more videos around that. But hopefully that's enough for you to get started. As a baseline, just start connecting people. Next step up, position yourself as an introducer that takes 5%, 10%, whatever you can get, and then go from there. It can get as creative as you can make it be. So good luck, go and make lots of money, and let us know in the comments, or in the forum what your thoughts are on all of this.